So Federal Reserve Chairman Janet Yellen was back on Capitol Hill this morning, briefing members of Congress on the latest with the economy and also monetary policy. Overall, it was largely more of the same. Janet Yellen mentioned winter's weather's impact on first quarter GDP growth, also mentioned some rising concern about the U.S. housing market, possible signs of a slowdown there. Mentioned that there's still considerable slack in the U.S. labor market, justifying continued easy monetary policy stance overall, and also mentioned in passing of the situation over in Ukraine. Some possible new points worth mentioning are Janet Yellen was questioned on the stock market possibly being overvalued. She mentioned that overall valuations are in line with historical ranges. It is worth mentioning, however, that the S&P 500's forward price-to-earnings multiple has moved back to the levels seen at the 2007 market peak. We're not quite up to 2000 levels, but if you talk about historical ranges, there's definitely possible signs of concern there. She did actually mention, if you're looking at just the small cap area of the U.S. stock market, that valuations could possibly be getting stretched there. We have seen the Russell 2000 move below its 200-day moving average for the first time since 2012, so it will be important to watch to see how small caps react to that comment. I mention this because another Federal Reserve official, Daniel Tarullo, back in mid-February mentioned that momentum tech stocks were actually looking at possibly stretched valuations there as well, and that coincided with a rollover in stocks such as Twitter and Pandora. So it's possible that the market is watching Federal Reserve comments closely enough to justify any mention of extended valuations in passing could justify some selling pressure going forward. One final point of mention is that there seems to be some rising criticism from some political officials of Federal Reserve policy possibly contributing to the inequality we're seeing both in wealth and in income. There was an opinion piece in the Wall Street Journal this morning discussing exactly that topic. Janet Yellen deferred, saying that the Fed's intention is to boost wealth via higher asset prices as a way to encourage growth and spending, which in turn creates jobs for middle-class families. It'll be interesting to watch this going forward as we head into the midterm elections to see if this becomes a bigger issue going forward.